I think the biggest word that comes to my mind here is uncertainty. You can see that, of course, consumers used to have a lot of faith into the financial system. And then after 2008, that faith to trust was really almost broken. And this is kind of a repetition now, again, because now consumers have gone through the experience of, I put my money somewhere and all of a sudden that bank is failing because of lack of actually being compliant with regulatory requirement and the lack of banks putting that risk on their priority list.
It's great to see you here in our studio. Thank you for coming in.
Yes, thank you for the invitation, Chris. This is really amazing to be here.
All right, so let's just start by hearing a little bit about who you are and what it is that you do.
Yeah, I'm Hannah. I'm quite a risk and data nerd, I would say, with a love for adventures. So I just came back from Mozambique from a workation, and it reminded me of two things, really. A, with this weather, I like to be below 40 meters of sea level. And also why I like to work in Pleo as a risk and decision scientist. You have a lot of bribery and corruption in Mozambique happening, which is really bad for economies. So this is what I do on my day-to-day basis. I work as a risk and decision scientist, which is someone who helps companies be protected from the bad guys that try to take advantage of the financial system. What Pleo does, we really create a lot of value based on 5 promises. They can be wrapped into like a very short sentence, to be honest. Like, we're really focused on spend management for SMB, so for small, medium businesses and mid-market, all across Europe now, so the EU and EEA. And we focus a lot on helping companies spending time on what matters. But even more important, we help companies to gain trust and control over their finances. And this is especially now in these economic times, one of the, I would almost say, most important topics on CFOs' minds, because gaining trust of your employees, but also vice versa, is vital, and control as well. So we offer for example, company cards that employees use to make company expenses. And as a CFO, as a finance function, you will always have insight into who has been spending, how much, and to whom. So it gives more autonomy to the employee, but also more control back to the company. Absolutely. I would like to first dive into like what it is and what makes it cool and what are like recent trends that we see. So what it is, if you maybe remember one of your like favorite thrillers, could be something like The Big Short or The Wolf of Wall Street. And there you have it. That is really financial crime. It means making promises on false information that maybe consumers fall a victim to, and make payments for a service or a product that doesn't exist, that could be a scam, for example. But then also we see that people are greedy, and especially criminals are greedy. They like to have very fancy, luxurious things like yachts and fancy cars. And in order to buy those luxurious goods, they need to wash any money that they got from scams, for example, through the financial system, because that money is dirty. It's coming not from a legitimate source. So it's coming from an illicit source. It needs to be washed through the financial system. And this is exactly what then a typical financial crime pattern would be. Is like taking that money, integrating it into the financial system, washing it through, which is also where this name money laundering comes from, and then getting it back into the society. And that is what we as like anti-financial crime practitioners do, is what we try to prevent and deter and detect. So, I mean, it depends a little bit on the business model. So I think there is like not one common pattern, because it does change also with like the economy. We always say the criminals, they love a crisis. So at the moment, we see a lot of fake companies being put up in order for criminals to launder money through those fake companies. That is a very criminal, very common pattern that you would see. But I think like if we look back to 2008, one of the most apparent things was like repackaging of mortgages that were completely faulty and then just selling those as very special options to investors, right? So there's a very broad range of financial crimes that you could see. It always depends a little bit on what industry are you looking into and what time frame you're looking into, what technology is also available. Unfortunately, criminals are very fast as well, so they can adapt over time, especially nowadays. I mean, with crypto and so on, there is so many more typologies, as we call them, that it's an impossible job for one person to do, which is why we need more collaboration between financial institutions. I think it's really important to think about why it's cool to work in the anti-financial crime space, and why it's cool. If you think about the big picture, anything bribery and corruption related destroys economies. So as a practitioner in that field, you have the opportunity and the purpose to make money good again and to ensure that our economy is stable, because there's nothing more detrimental to an economy than money laundering, bribery, corruptions, and people not to pay companies especially not to pay their taxes, because that money basically doesn't end up where it's supposed to, which is often in the public services, which then is distributed through the general welfare. So I think it's a really cool job because it has a purpose and it is ever evolving, which means you always have to keep up with recent regulatory requirements, but also with recent technology. And this is where the data part comes in. Now we focus much more on a so-called risk-based approach, which is an incentive by the regulator to ensure we focus our attention and our controls on where the risk actually is. So we're not expected to have this big wall in front of a financial institution. We're really required to understand what is our business model. A business model of Pleo is very different than a business model from a big bank. We are having only a money license, versus a bank is a banking license. So there's different business models which depend on the customer, the products and services you offers, what is offered. So it always depends on the business model, and from that there's different risks arising that need to be controlled. I think it's a really double-edged sword, because on one side it makes our life much easier. We can now use machine learning and algorithms to help us detect financial crime. We're becoming much faster in pattern recognition, versus before we were relying a lot on rule-based algorithms, which are very linear and very static and cannot adapt to new behavior. And now we have the power of machine learning, we have the power of artificial intelligence that can help us as an assistant to really design better controls. And I'm saying it's a double-edged sword because also on the other hand, of course, there's new technologies that also the criminals can use to try and attack the financial system. I think it's very important to remember that we're operating in a regulated environment, which means that if we do not follow requirements by the regulator, we get hefty fines. So as in our jobs, we make sure we don't get these fines and we follow the requirements. So that is already first source of competitive advantages, just to make sure we have a compliant organization. And then that's that's a quite, I think, intuitive goal. But the second one is anti-financial crime can be a competitive advantage in that space because we focus on efficiency and effectiveness. we are really close usually with the operations of a company because of course we want to ensure that all these requirements that we need to follow are followed in the most efficient way, which often means automating certain things like know your customer, automating risk models, automating systems like transaction surveillance, which if you're really good at that and your competitor is not, you will have a much more lean operations structure and you're able to control your costs, which is a very great advantage because that's the only thing we can really control, I think, in nowadays economy. So that is like a competitive advantage right there. It translates directly to the bottom line. Right. So the automation part and being close, like seeing oneself as an operational unit, I think is absolutely key. The third part is, of course, that trust is, as we always say, hard to gain. It's a very delicate plant, and trust by customers is nothing that we take like for granted. So only if you have a company that doesn't go through scandal after scandal will customers actually trust you with their money. So if you have a compliant organization that really has no reputational damage so far, you establish trust with customers much better. They will feel how good your KYC is as well. They will feel how often you ask them for information, what type of information you want from them, which is everything we do behind in order to fulfill our requirements to the regulator. I think the biggest word that comes to my mind here is uncertainty. You can see that, of course, consumers used to have a lot of faith into the financial system, and then after 2008, that faith to trust was really almost broken. And this is kind of a repetition now, again, because now consumers have gone through the experience of I put my money somewhere and all of a sudden that bank is failing because of lack of actually being compliant with regulatory requirement, and the lack of banks putting that on risk on their priority list, the lack of e-money institutions putting that on their priority list. So it's a common threat that we have seen before. Yes, it can be maybe not intuitive to put compliance and put risk at the forefront of any of your decision making. But I think this also goes for normal life. I mean, life and business is risk-taking, but it is very important to understand what risks you're taking, why you're taking them, and to what degree. And I think the understanding is just often not there. There's no focus on risk. There's a lot of focus on short-termistic capital gains rather than a focus on the long-term benefit. So I think that is like talking a little bit more holistically, really the issue and why we see all these failures of banks happening again. Banks are made of humans making decisions at an aggregate format, right? So it's business is people, which means the decision making, the focus has been just not on risk and on decision making, it has been on quick capital gains. There's a lot, so I'm only going to focus on, I think, my top three. I would say the international footprint is one of the biggest challenges. Now companies are global, criminals are global, and it makes it very difficult to sometimes understand where is money coming from, where is it going, because companies are so global and sometimes have a very complex ownership structure, for example. So I think this international footprint is really one of the biggest challenges because we don't always have all the data points we need. Depends a little bit on the country, on what data points we can get our hands on. The second part is really the supervisory pressure. There is constantly new regulation coming out. You need to understand that regulation, you need to interpret it, and then you need to integrate it into your organization in the right way, which often means translating whatever the regulator says into data points, which is not always easy. And I think the third one is just economic pressure. We have a cost pressure, of course, so there's a focus on automation, but it's always being very sure about understanding what can be automated, for what reason, and what's the benefit for the organization. So really thinking in key performance indicators, knowing what kind of metrics you have set up for yourself as success metrics. When you, like, for example, design a control, you say, okay, it should bring down our false positive rate by a certain percentage, but how much does it cost us? Is a really important consideration to make. So I think nowadays these cost considerations are definitely also a big pressure. So anything relating to efficiency and effectiveness is a trade-off we need to balance. I think I would like people to go away with a thought of how do I make decisions? Like, what information do I take into account when I make the decisions? And that can be, of course, like in your day-to-day business life. Like, where do you invest your money in? Might it be your company money? Might it be your private money? I think I would wish that people would make better informed decisions, more based on facts and not so much on what is on vogue and what this newspaper says. I think some research would be good for all of us to do before we make our decisions.